Hello and welcome to successfultradings.com. In today's video, we are going to showcase another illustration of call option example. Unlike last time where we used an actual option flow, this time around it is actually through a FlowAlgo equity alert that came in. So this was on January 31st. Yeah, has been a while. So it's on a stock called Gilead. The ticker for it is GILD. It's a stock I'm very familiar with. I have many stories to bring in the near future on this one. But in any case, so a few days, because the earning was on February the 4th, this very alert that you're showing on here came in. I'm using the stock whisperer feed, but you have FlowAlgo, you get to see both the equity and the option flows, as we have shared in the video review of how to use FlowAlgo. So in this case, just for simplicity reason, I'm not logging into FlowAlgo. I'm using the stock whisperer, who solely focus on the equity side of FlowAlgo. So this print came in on the 31st. So let us go ahead and see how you could have benefited through call option example from this print. So without any further ado, let us go ahead and go side by side if we can. So I'm going to switch on here to TradingView. Let me maybe maximize it a little bit further. So I'm using the 1 hour just to get off some granularity. This is a wild stock. If you're not familiar with Gilead, it's in a biopharma. This stock has a very how should I put it, not so great last 3 years or so, or even 4 years. I started trading this stock I think in 2016 and has been downhill since then, just doing sideways. But in any case, after this alert on the 31st, where's the 31st here? The 31st will be these candles, right? So the 31st will be these candles. So the alert came in at 63.84. Is that correct? We can go and flash it again. So 63.80 more precisely, 10:58, so 11 a.m. Eastern time or so. So somewhere in here. So the close on that day was 63.21. So we closed below the print, which is normally a sign of a bearish. But the next day, look at this spike. All the way from, let's say, $63, really, it traded below $63 on the 31st, around the close. You went from $63 to a high of $68.60 the very next day, which was a Monday. So if you were to take this trade overnight for 2 days, you will have made a lot of money. I do not recall precisely, but I think we may have traded this for 66 call, but that's not what I'm going to be showcasing here right now. I'm going to be showcasing the other setup that was in place on the 5th, because after going all the way to 68, as usual, Gilead, which is known really for just major retracement. I mean, look at these upper shadows in this candle. That's just nasty to trade. I can't tell you. But in any case, we were fortunate enough here to be patient on the 5th. So on the 5th, which that transpired, we decided to go long. And we decided to go long because we are here above the equity print. So meaning this 1.1 million share, how many shares were there that they were targeting? 1.1 million share. That's a lot of money that somebody really wanted to put into this stock. So they bought the stock. This is the stock. That's what we are looking at. So they bought 1.1 million share at $63.80. So, and then immediately the next day, they gained almost $5. That's a lot. That's a lot on just one stock. So the whomever put down 1.1 million there on 1.1 million shares was able to gain $5 per share almost here. So that's That's pretty good. That's pretty good. But for us, when it retreated here, we decided to go long, and we decided to go long thinking that they will want more than $5 after one day. Really, that was our main idea into taking these option calls in this example that we are illustrating with you here today. So we're going to look at that trade that we took and then take a look at how it turned out. So let's go here and just open, if we can. These are the calls. All right, so on the 5th, very early in the trading session, so this is Pacific time here in my email, within 13 minutes in, we decided to buy Gilead February 21st, 75 calls. Let me just stop there and go back to the charts so that you can get a glimpse of pretty much what was our strategy here. So in this candle here, within this big red candle, if I go and maybe put 15 minutes so that we can see it better. So we want the 31st, 643. We want the 5th, 643. So this is somewhere here. Let me maximize that. Okay. So this is this candle here, or actually maybe this other one. Yeah. No, this one, because 15 minutes. This first candle, we made an entry for 75 calls expiring a week, almost 10 days from now. So again, our reasoning was that we thought that whomever got his $5 here, or her $5 from this move to this move, will want to get more. So they were cheap. So they were how cheap were they? They were going for 10 cents. So we got 4. Actually, we did get more than that. I think maybe we got maybe some other more expensive one, but the lion's share of our position we got there at 10 cents. And what transpired is that the very next day, on the 6th, these call options, the 75 call expiring February 21st, they went from 10 cents, as you can see here, to at least I sold them at 95 cents. As you can see, quantity 5, though I'm only showing here, meaning I bought orders that are not being shown on here. So meaning I got some separate fields. So from here, 10 cents to 9 cents, that's 900% straight up. And I left one contract that I sold much later at $1.37. So we got 900%. Can we get the calculator, please? So that's $1.27, right? So we can do the maths. 1,200% and 900% from this level. 900% going from 10 cents to 91 cents, and 1,200% going from 10 cents to $1.37. So this is another call option example that we were able to trade on Gilead. The trigger was the option the FlowAlgo equity order instead of the usual FlowAlgo option order. I wanted to show you another set of trade or call option trade that you can take based on equity, and those actually are the safest one most of the time, because they will allow you to be patient as they like to do what we call a splash, meaning they go the opposite direction of the print. That's happened here on the 31st. So I think we traded again the 66 call just because I think we may have even strangled them. But in any case, the major move here was to get a 10 bagger from here for options that actually had expiration 2 weeks away. We were able to get over 1,000% on them. Imagine if we were to take February 14 call 75 calls, we will have made a much bigger percentage. The other takeaway that I wanted to showcase here, and I'm going to be doing another video on another stock prominent stock that's good for option is the fact that when you're in this trade and things start going your way, it's not the end of it. This is actually the beginning of other things to come, because you could have short it here at 71 and you will have actually made a lot of money. In our case, we were not in a situation to do so. The truth is that the trade that I'm showing you here, believe it or not, this we bought it on the 5th, right? We were traveling. I was traveling on the 6th. This execution that you see here, actually both of them, because they were only less than 10 minutes apart, I made them at 35,000 feet on a plane that was crossing the Atlantic. So that was quite something. So that's, I think, when I saw this gain, knowing Gilead, I had no choice but to take the trade. So I hope you enjoy the video. You are able to learn from it through this yet another illustration of call option example. Please like the video, subscribe, share with your friends in social media, and we hope to see you next time. Bye-bye. Hello.